Hey there, everybody. Welcome back to another 21st Century Renaissance and another open interest newsletter breakdown on GameStop. I am your host, Dr. Michael LoPiano. That's still who I am. That's still the host of this show. We're going to have probably a little bit of a shorter episode today, reflecting on some broader market elements, still taking into account some of these factors we've been talking about over the past couple days, thinking about what that might mean for us specifically within the next 2 trading days, right, heading into this last weekly expiry of the August OPEX period that's coming up today. We will, as always, before we get started, turn our attention to our gratitude. Today, thanks go out to Prince Jackson once again for sponsoring today's video and newsletter breakdown. Newsletter and video breakdown, as well as to our monthly supporters, Not Medical Advice, Master, Kurt Lusko, Cosmo, Tropic, Dayswag52, and Hey Lucky's, aka Faithless Looter, as well as to our cadre of folks who went out and treated me and Mrs. Mojo to some nice wedding gifts. So many thanks. As a reminder, we will be back to our regular schedule this week, Friday, 4 p.m. Eastern time after market close. We'll be having our live stream, our weekly live stream, talking about what to breaking down some of the events that went down the previous week, maybe what we can anticipate in the week to come, as well as thinking about some deeper topics, either structurally related to market mechanics, thinking about trading, or thinking about the fundamentals of GameStop itself. In particular, we'll be thinking this week about what's going on here with the push start arcade, and what that means for the marketplace tokenization of collectibles model that we talked about way back during our Thailand days. So we'll be thinking about that this Friday. We'll see you there. Today, after yesterday's trading, really kind of not much of a trading day, in the sense that we did not see much. It does look like these elements, possible covering or closing of settlement obligations, clearing, I should say, of settlement obligations. We look to maybe to have gotten a little bit of that Monday, Tuesday, and then yesterday really just kind of we opened up a little bit down and then closed within 1 cent of our open. Almost got a white trading day, a white candle on the day. That is neither loss nor gain versus the opening price. Broader market-wise, things do look stable. Things don't really point to a major correction or sort of structural or contextual weakness, I should say, with respect to GameStop. SPY pushing again. It's within a few dollars of all-time highs yet again. Momentum-wise, we're still seeing a bit of weakness. So this would point to me. It's not guaranteed to be a major point of weakness. It doesn't mean we have to have a correction, but it momentum, especially our price momentum oscillator, can be a good indicator of when a move to the upside is, say, supported by continuous buying relative to price action, or whether that price action is moving up on a lack of buying momentum. So we do see it starting to move here. Obviously, if we look back, end of last year, we did have movement up. We did have some slight uncrosses, slight movements below our 55 line here on the daily chart, right? Especially going into the end of last year, really for most of last year. So that doesn't necessarily mean that we are going to go through a big series of corrections here, but it does suggest that we may, right, if we do move up here, if we do get back to around the 640 level, that may be a good candidate for a double top and a correction downward, especially going into the September OPEX period. If we take a look at our options positioning, we can see that traders are reasonably cautious, I suppose, going into September OPEX, right? We are put dominant in terms of positioning throughout the September, I should say, the deeper we push into the September OPEX period, starting with August OPEX, going out into September OPEX, right? We are put dominant. However, in the short term, we're very, very much skewed in favor of calls. Our landscape is primarily determined by call positioning, which says, of course, in SPY, we know this, low volatility, steady, slow grind upward, and we do have 640 overhead as a call wall target candidate, which will act as a target intra-week, at least looking like into the end of this week and maybe into the beginning of next week, though that's definitely a question mark with respect to how much of this week's call OI will in fact be rolled into early next week. Of course, some of this may be some early pricing in with respect to the estimated rate cuts. Trump administration has been flirting, has been continuing to flirt, is now appearing more serious about replacing Fed Chair Jerome Powell. So we'll see what that means as far as increasing the likelihood of a rate cut. And part of the administration's complaints with Fed Chair Jerome Powell, of course, has been his slowness to go ahead and implement rate cuts. Yeah, so this may be seen as an attempt by the Trump administration to replace Powell with someone who would go ahead and just pull the trigger on the rate cut. It seems very highly likely, at least by estimation over at FedWatch, that we will go ahead and get that cut on the 17th. So some of that is likely being priced in. BTC, always important to look at as far as GME goes. It is going through a little bit of a recovery off of this little mini dip here for about a week. Still moving this way, might be hitting a little bit of midterm resistance off of that 20-day moving average. But of course, support multiple times was found right here atop the 50-day moving average, which basically going all the way back to the end of last year has served as a support point there. Obviously, if we do see continued bullishness in Bitcoin, if we can see Bitcoin move to all-time highs, that can serve as something of a catalyst to start to move GME out of this kind of 22 range where we've been sitting, modestly, can pull us up maybe about 10 or 20 cents off our lower bounds there, and maybe coax us into a slightly higher trading range, something like what we saw back in mid-July. So, I mean, not terribly exciting stuff, but things that are important to take into account, certainly as we move forward with our weekly trading into the last full trading week of the August OPEX period. We've been talking as well about thinking about what institutions are doing, whether institutions have been going ahead and following through with the thesis that indeed what we saw towards the end of June was likely a good opportunity for institutional accumulation. Of course, we won't know about July until way, way down the line in November. But certainly as far as possible expansions in GME holdings, that took place in the second half, say, of June, following the convertible bond offering. We got some very, very high volume. We did have a few notable institutions, not crazy big stuff, change their position size. It's really on the smaller size. When we're seeing orders in the millions, that's really those are big movers. A couple 100,000 shares can still be significant, though. We saw that AGF management did open a completely new position, over 86,000 shares, only about $2 million, but still worth pointing out that we are seeing that accumulation. Doesn't come anywhere close to the Bank of Montreal we pointed out yesterday, over 2 million shares acquired. Marathon Trading, which was an interesting institutional acquisition last quarter, they went ahead and slashed their position size by over 75%. So down about 267,000 shares. We'll have to see, right? Institutions will, of course, not file, right? Essentially until the deadline. That's what we see. They want to keep their cards as close to the chest as they can for as long as they can. And that means really waiting until the deadline pops up. In terms of options activity, right? Very slow day, not only in terms of price action, in terms of volume, but in terms of what options are actually doing. Very low volume of options activity. Most trades that we saw that affected the open interest were largely trades to close, both on the call and the put side. Going into next week, that's almost as likely. We did see some decent sides orders come in for calls sold at $29, $23. We saw a slight bid skew on trades, but we did see a fair number of contracts closed at $23. Not a lot to remark on there, especially in the short term. Still looks, I would say the options landscape is not particularly strong on betting for the likelihood of some sort of major volatility event over the next 8 trading days, doesn't, or 7 trading days, I should say. Doesn't mean that that won't happen or that can't happen. Sometimes we don't see that options volume kind of come in until the last second, when sort of local higher volatility upside event does in fact occur in the span of a trading week. Right, that would be something like not necessarily an on-cycle sort of major multi-month sort of bull move, but insofar as some of these Friday volatility events, a lot of which we saw take place toward the end of August last year, September, and October. Max pain wise, we're not really looking at anything different, largely sticking at around 23, 22.5, right? In some weeks it's actually slid down. So for August OPEX, we're looking at 22.5. What's interesting in terms of our gamma exposure, that is the dealer exposure to the rate of change of gamma of outstanding options contracts, right, is we do have a lot of accumulated exposure, especially at that $23 strike. So you'll recall, right, what this can mean is the later we push into the week, right, the tighter and more higher valued gamma exposure is going to get with respect to a given options chain. So as we push later on into the week, delta values, especially for calls, are going to decay. Right, out of the money stuff is going to decay. In the money stuff is going to increase. In terms of calls, we're usually looking at 90 to 95% of our call OI being out of the money. When we start to see something, actually, this is a good question. Something I should go take a look at here, which I neglected to necessarily in my write-up, but a good inclination of whether we might be expecting a major upward volatility event possibly firing off at the end of the week is when we start to see that ratio get decently above 90. So 91, 92, if we have 91 or 92% of our total call OI out of the money, that can still be typical. When we start to see things like 95, 96, 97, 98% of that call OI out of the money heading into the end of the week, that is a good indication that we can expect some sort of an equalizing move toward the end of the week to exploit some of that latent and built up gamma exposure. So we are getting somewhat close to this going into the end of this week. So here, if we take a look at our max pain strikes rate, we can take a look and see what's in the money. We're at about, right, so fewer than 10,000. So we're right around 93. If we do right now, if we dip below 2250, I mean, certainly not 22. 22 would be very aggressive. That would, I think, end up being about 90 something percent, 97 or 98% of ROI. But if we take a look here, let's take a look at 88. What do we have in terms of, yeah, if we dip below 2250, if we see this today, that's going to mean, yeah, around 96%, I think, of our total call OI will be out of the money. Highly unusual to see that. We're certainly very close to that. And we have a lot of gamma built up on top of us. We had a lot of OI right immediately on top of us, as you can see here. Which means that, right, as we see this kind of compressing here, what this means is that a lot of hedging will occur very rapidly should these strikes move into the money. So we can see that $23 is a massive, massive gamma position going into the end of this week. That bar will actually increase the closer we get to the money and the later we go into the week. So I imagine it's probably at something like 0.45 is the gamma per contract. Let me take a look real quick on that 23 strike. Gamma. Not quite that high yet. Oh no, wait, this is I'm looking at the wrong expiry here. Yeah, I was right. Exactly. 0.45. Well, the delta on that contract right now is 0.42. So that means if during trading today, the price of GameStop goes from 22.81 to 32.81, then the delta on the $23 contract will go from 0.42 to 0.87. And that will significantly impact the pricing of that contract, right? As well as the dealer's hedging with respect to that contract. So that will mean that for that $1 move, the dealer will, let's say, for every contract, will hedge 45 shares of GameStop if we move up that $1. So right now we've got, just on that contract, right? There's other hedging that goes on for other contracts. Right now we've got, let's see, how many open contracts at 23. Just for this week, we've got about 20,000 contracts. So just at 23. So if 23 goes, if we go to $23.81, that's going to be, let's see, 45, that's 450,000. That'd be 800,000. It's 800,000 shares of GameStop would be hedged just at that contract for that $1 move. Just on this week, right? Just on this week in that one move. So 23.5 also has over 10,000 contracts out. 24 also has that, right? So you're talking to move up $1 would result in millions of shares of lit market purchases that would very quickly, right, and very tightly boost GameStop, boost the price of the underlying on its way up intraday. And of course, that sensitivity only increases the later in the week we get, right, as dealers shed share hedges going into the end of the week as a result of charm that is delta decay over time. And then, so then you think about it, right, as a contract goes into the money, then the probability very quickly changes with respect to whether it's going to close the week in or out of the money. So that can have very profound influences on the pricing of options contracts. And as we've seen in the past, right, we've seen institutions exploit that going into the end of the week, especially amid it's easier to do smaller institutions, let's say, to whom profiting off of that type of move would be more impactful versus less impactful, are then also at liberty in lower volume conditions to be able to go ahead and stimulate that type of move. So not necessarily saying that sort of thing will happen, but this does look like, especially this type of setup, does say something like that could happen. So something to keep aware of, certainly, as you may be planning trades. Now, I wouldn't necessarily say it would be a blow the roof off the options chain, anything like that, anything to say launch us above $25. But if we go back, let's say to we saw quite a bit of this. Let's bump down here. Something like this day, going back to Friday, October 24th, we saw this take place. I mean, it shot up and then it sold right back off. We actually saw this very recently. Where do we see this? Something similar to this, although they didn't target a Friday with it. But October 25th, we saw an event of this type. What else? September 20th, we saw an event of this type. September 6th, we saw one. August 29, August 30, we saw events like this. And I think we saw one maybe a little bit earlier here too. Yeah, the 9th, we think we got a little bit of that. But in any case, it's worth keeping an eye out. That sort of move can take place, and it can certainly change the implied volatility environment very quickly when something like that does go ahead and set off. So still keeping an eye out on regular factors, right? Nothing terribly exciting. We do have some of that potential in there, especially as we push later and later into the week. If something like that is being set up for a Friday, we may see, typically we'll see, right, some block call trades, nothing crazy, but a couple thousand long call trades, let's say, that are conspicuously short dated will come across the options feed. So if you guys are flow feed watchers, keeping an eye on what comes across the tape today can potentially give us an indication of what we might be able to expect tomorrow. If you see somebody come in and just all of a sudden buy up a block of 2,000 or 4,000, I don't know, $23.50 calls for next week, that may be a good indication that someone is planning to execute a move of that kind, right? So yeah, just a little thing. That's kind of my 2 cents. Trading wise going into the end of this week, especially since we don't see too much movement in any of our sort of broader factors here, anything pertinent to any of that, clearing of settlement obligation stuff that we talked about yesterday. Certainly go ahead and check out yesterday's video if you want to break down of that discussion. Again, a little bit longer video, but I think it summarizes more or less what I'm looking at over the next month to 5 weeks for GameStop, especially thinking about institutional filing, thinking about Q2 earnings, and then of course rate cuts potentially coming on September 17th. So yeah, that's gonna bring our video to a conclusion for today. Thank you very much, as always, you guys, for watching and listening. Very much looking forward to seeing what trading has for us in store today, for tomorrow, and of course seeing all of you at our weekly live stream tomorrow at 4 p.m. Eastern time after market close. We'll see you then. In the meantime, let's go GameStop. So thanks very much again, everyone. We'll see you tomorrow.